SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's not hang around, let's not beat around the bush. Make a nice short video today because there's really not a great deal to say. It's very much in line with everything that I've been saying for this whole week and prior to that, the last couple of months really, since we got the top on the Dixie. So this is basically what we're looking at really. A top on the Dixie and a pullback on the Dixie and then a bounce on the Dixie, which is likely to take place around here. However, it might not, but we shouldn't sort of change the goalpost. We should basically stick to the same analysis. We got the top, pretty much the exact top, and our target was this level here. Whether we come down further immediately or over time, which is most likely, you know, this is a very, very bouncy area for Dixie. Now, obviously, it's the weekend now, so it's not, you know, there is no Dixie today. But couple that with the fact that this is, you know, major indices look like this. This is the S&P, rejection, 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 and probably a rejection here as well. So listen, I use the word probably. It's not definitely, it's probably, because the Dixie has come down to the area where we thought it was gonna come down to, and it's there now. S&P and major indexes have also come up to the area where we thought they were going to go up to, and they're there right now. And so that was the everything bounce, right? It's all done. Yeah, that's it. That's finished. So the everything bounce 2.0 reached for the S&P a 17% move. Awesome, awesome. And people were telling me it was going to crash hard, and the Dixie down by 8.5%. When people told me it was going to explode, go to 120. So look, for a lot of people that can't see anything other than what's right in front of their face, you know, it's like a game of chess. You know, the best chess players, which aren't me, I can't really play it that well, but you're supposed to think 4, 5, 6, 7, 8, 9, 10 moves ahead if possible. And as far as I can see now, you know, we worked out the move ahead when it came to the pullback on the Dixie, and that was awesome. The biggest pullback in in many years. We got that. Now it's time for a bounce, and like I said, I don't think this bounce is going to take us up to the top of the trend line. I think it's going to take us up to any one of these weekly exponential moving averages. You know, we're not going to see above 109 again, probably for a little while, but we'll wait and see. Either way, the thing is to focus on a bounce on the Dixie and a pullback on the S&P and all the other indices. And with that will be a pullback most likely on Bitcoin. Now, Bitcoin has been decoupled recently, not in a good way due to FTX. So there is a chance that we might see some difference potentially with Bitcoin. But looking at this on the crack trading chart of the 1 hourly time frame, we've got yet another sort of relatively sharp rejection from the lower $17,000 zone. And yesterday we saw a pullback, more or less just a few $100s higher. So yeah, we are looking at golden cross and potentially a retest of this on the 1 hourly chart, only 1 hourly chart. But either way, it doesn't feel primed to do a breakout or anything like that at the moment. However, this is the weekend, and so with the weekend closing for traditional markets like this and Dixie like this, it can, should I say, for today at least anyway, give the upper hand to the bulls, given the position on the chart and the uncertainty. Like I say, some people can't see anything other than what's right in front of their face. They'll be seeing a Dixie which is going down. They'll have other perma bears for Dixie saying it's going to go down forever. It's going back down, blah, blah, blah. Yeah, and they might feel like it's an appropriate time to trade long on something like Bitcoin, especially when traditional markets aren't closing. But I actually think that there's a good chance, a pretty good chance of a bounce around here and a pullback around here, and that is most likely, like I say, most likely gonna filter through to the weak ass crypto, which is what we like to try and trade. Been pretty useless at trading it recently though because of FTX, but generally, you know, that's our bag. So with that and with all that said, you know, we are looking for a pullback anyway, just naturally, just based on this chart from what we see here. Stiff rejection, and probably come back into the $16,500 zone, which is held up pretty well. It's a pivotal area, really, not just on a horizontal time frame. Really, you can just see what that looks like. We draw a line straight through the pie, really, But if we take ourselves to the daily, just very briefly, we've got ourselves some moving averages that are just floating in and around that, really. So we've got our 10 exponential hitting the 16,770. That should hold up. We've got the 7 simple, just a little bit lower than that, and that's basically it. I thought the Bollinger Band Center was there for a moment. Let me have a look. Yes, it is. Yeah, I just took it off. So we've got 16,580. So a lot of support on the daily around this area. So I think it's reasonable to expect a pullback to that level now, and just on its own individual merit, really. 50 exponential moving average on the 4 hourly is 16,750. So there's a fair bit of support between 16,500, 16,750. There's a fair bit of support around there. Now, losing that area would be a bit of a problem, and we'll probably at that point see new lows form on Bitcoin over time as the Dixie bounces and indices pull back. But I've been saying it for a couple of weeks, and I'm convincing myself about it now, is that I think that this could be the low now for traditional markets. So the bear market effectively over now for traditional markets, and we find ourselves sort of breaking out, creeping out of this descending triangle, and it would be an appropriate place. You know, you want to get out of these triangles, before you reach 70 to 75% of the way through of the apex. So if we consider this to be the bottom, and we extend this to to the area, then really what we're looking at here is, if we just measure this is just very rough and ready and crude just to show you, but so we got a 600-day time frame there, and so far we're just about 60% of the way through. So over the next few weeks, maybe into the beginning of next year, we find our way creeping out of this descending triangle. We'll be pretty bullish to break out around 60-70% of the way through. So I'm in favour of that. But first of all, we are looking for a pullback. I really don't think there's anything wrong with that. I think it's perfectly appropriate to have a pullback on that now. And the pullback can take us probably back, maybe back down to the 3,900 zone. If it comes down a little further, it's also not a big deal either. Have a look on the monthly. There's a lot of support for the S&P around that area. And look, even if we do come down even deeper, this is still relatively, it's not steep, but there is an uptrend still on the 50 exponential. We might get the support at the worst case scenario, really. So bottom of the Bollinger Band is also the 50 exponential, and that comes in around 3,664 as of this month. So it's not all bad. So don't particularly be afraid of what you see here on the S&P, and also don't get too upset when you see a bounce take place on the Dixie, a bounce which might be quite steep and significant by about 4%. That can happen, and that can happen over the month of December. It's only once this bounce has finally found its new resistance, forming a lower high, that the game is on, really, and the bear market is forgotten about for traditional markets, and hopefully for Bitcoin too. That would make sense on a 4-year market cycle time frame. December would be the last month for a potential capitulation, and if we do get a pullback now, which I think we will on the S&P, let's just say we came down to something along these lines, and then found our way bouncing, and then we break out. That would be the end of the bear market for traditional markets. Time. Don't look at this and go, "Oh, I thought you said this is February." Look, either way, if it's traditional markets or Bitcoin or whatever that you want to buy, or you're looking for a bull market, you should really see a period of accumulation to begin with, and an accumulation on a long-term time frame. That we're looking at weeklies here, so a macro time frame would likely take a couple of months, I would imagine. So you're not going to get caught out. You might feel like you are if Bitcoin rallies today or next week up to 18,000 or maybe even 20,000, which is a possibility that it can do that. You might think, oh, the bull market started already. No, that's just an extension of what this bear market rally is. Doesn't look like a bear market rally for Bitcoin. Bitcoin obviously destroyed by FTX, but the bear market rally for S&P, for instance, worked out very well. And on this channel, we got both of these major swings. That was the Everything Bounce, and this was the Everything Bounce 2.0. We got both of those pretty much from the bottom and got out more or less at the top. So, we've been able to do decent big swings on traditional markets in a bear market. We've got a decent handle on this chart. And I would expect, like I say, on the first pass, or just naturally, that we get a rejection, especially because a lot of this Everything Bounce this time round anyway was, we deciphered the move based on Forex charts, really. It was a Forex move. This time, this everything bounce was to do with commodities. So we were looking at commodities peaking and then a rotation from the money flow from commodities into equities, and we got that. This time round, it was much more of a Forex kind of vibe. And so now what we're thinking about is actually probably more of a Forex kind of situation based around Dixie, pull back on this and then sort of creeping out and accumulating over maybe the first quarter of next year. That would be the same deal for Bitcoin too, I would imagine, because that would be in line with the 4-year market cycle. So long story short, things are looking good. Things are almost exactly the same as they were before. It's in the last bear market. And so this could be the final capitulation, but if it's not, we come down a little lower. And just before you think, well, actually, that's not how it happened before. That's not how it happened before. It actually is pretty much how it happened before. So if we go all the way back in time, to revisit what we saw in the last capitulation, yeah, we had a couple of weeks worth of downside, and if you look at this on a weekly, actually, it puts it into a bit more perspective. You see 2 giant weeks of red. That was capitulation, man. That was it. 42% over 2 weeks. That's it. And we started to creep up, and then kapow, down another bit to round it off to 50%. So basically, a little low from here is not a big deal, and I would make the case that if you're looking to catch knives on the next major lows, if we break down below our previous low 15,700, if we creep down to 14,000, 12,000, incremental buybacks for those who want to catch knives is not a bad idea. For those who are a bit more conservative, like I was in the last bear market, I don't think I'm going to be as conservative this time round. If we do start to get significant lows on Bitcoin, I'm going to bite the bullet, not just for Bitcoin, but mostly for altcoins, the ones that I've been, highlighting for a while. I'll bite the bullet because time and cycle seem to ring true. I'm not looking for immediate gratification on those trades. I'm looking for decent entry points for long-term positions that I can hold and stake. Like I've been saying since the summer, this would be the strategy in the form of a capitulation crash, and that's what I'll be looking to do. I think the next major lows would warrant that sort of buy the dip, catch the knife, whatever you want to call it. But I was talking on the Patreon live stream, just trying to put it into context. Don't expect your altcoins to do 1,000% next year. Expect them to basically go sideways for a year or two, which is basically what for the majority of altcoins, what they did for the first year of the bull markets. They went up 100, 300, 400%, then they went down to where they came from. They went up again, 2, 3, 400%, then they went down again. This is why we use the Bitcoin dominance chart to trade from, because we can spot rotations and actually trade these things. But if you're looking to buy, hold, and stake, for instance, you're going to have to ride the waves of volatility for a couple of years. This is the nature of a bull market. Bull market is not a bull run. A bull market is a favorable trading environment for going long and holding. But it's not a bull run. A bull run usually takes place at the end when everybody comes back into crypto. At the moment, everybody's left. Not a very popular game to play at the moment is crypto. But in a long story short, that should be your expectations. You buy low and then hold, stake for a couple, 2 or 3 years, and then you get ready to sell when all the sheep start to come back on and my YouTube channel gets watched by more than 2.5 people a day. So that's basically the deal. So Bitcoin on the short-term time frames, I'm in favor of rejection, but it is the weekend with the Dixie closing the way it did. It still might add a little bit further upside. 18,000, 18,500 would be pretty much the top for me on this current run if we get it. Next week, it'll be very interesting to see how the Dixie and S&P behave, because they could continue with their current direction. They could, but as we had our eyes set on this move 7 weeks ago, and we got it, and our target was where we've come down to now, and we've got it, it would be unreasonable to change the goalpost and go, well, actually, now that we're here, I think we're going to go down further. That's not me. Short the top or buy the bottom of the stocks, which is exactly what we did. Exit positions when we come to the 50 exponential moving average, which is where we are right now. So that is done and dusted. If we have continuation, no big deal, that's fine. But I'm not looking for any major big swings at this point forward. We could easily get overreach, and that's fine. And I'm happy to to sit on the sidelines and watch things continue to go up, because I've already done my move. I already did it. You know, I got in, even if I just got in at the bottom, which I didn't, I got in further than that. That was a 13-14% just on S&P. Never mind all the other stuff that I've been trading in between that. So let's have a rain check on our bias. You know, we did well. We got it again. We got another excellent swing, and the chances are that that swing has now come to an end. And over the next few weeks, and probably into next month, we will see if this bear market has officially ended, which I think it has, and we enter into a period of accumulation, which would be excellent, and that's where we basically look for the next major opportunity, because we've done it now, we achieved it, and it's finished, and that's fine. We can sit back and we can enjoy Christmas. I'm going to go put up the tree with the kids in a minute, and that's it. So effectively, work is done for the year for me now. I'll just keep my eye on the prize and monitor the situation. But yeah, it's been a difficult year to trade in, obviously, but yeah, with these big epic everything bounces that we managed to do, it basically paid the bills for the whole year, really, so that's fine. Anyway, if you like the video, please like it at this stage. Apparently YouTube love that sort of thing. It shows that you stayed to the end. Liking it is nice anyway, but if you want to prove something to YouTube, you like it now, rather than at the beginning. Either way, I appreciate your viewers. I appreciate you watching, and I hope you have a nice weekend. Take it easy.